All right, let's get more reaction to what we've been hearing from the floor of the Senate. Senators Reid and McConnell talking past each other. Sounds like we're not exactly that close to a fiscal cliff resolution at this point.
Yeah, so what does it all mean for Wall Street? Will it be an ugly day tomorrow? We have now Michael Guyett from Pension Partners, Keith Springer from Springer Financial Advisors, Michael Farr from Farr Miller in Washington, and our very own Rick Santelli. Michael, I'm going to get to you first of all. You know, the market's moved up and kind of just closed just very marginally in the red. On the news, the House is going to reconvene on Sunday night. I get the feeling that had all of that back and forth between Senators Reid and McConnell, had that actually come out during market hours, the market would have reacted very differently. They are so far apart. I did not hear anything in the way of compromise or coming together there. Yeah,
that may be true, but, you know, even before the news of the House meeting on Sunday, markets were down, what, 1.2%? That's noise. That's not really a panic. You know, I think the end result of the fiscal cliff here is not risk off. It's risk rotation into those areas of the investable landscape which are not having their own fiscal cliffs. Look at emerging markets. Look at Europe. They are decoupling. This is not a traditional risk-off period. If anything, price is still very bullish. I'd rather listen to price. I'd rather listen to what retailers are saying intraday.
Why do you say it's still very bullish?
When you look at the way retailers behaved intraday, they recovered almost completely the loss. That suggests that the market thinks tax cuts are still going to be in play. When you look at the way small caps, which are domestically sensitive, are still outperforming, the market is saying it's okay. You know, we've had an increase of market cap this year in the S&P 500 of over $1 trillion.
Right.
That's more than the fiscal cliff.
Let me go to my Facebook friend Michael Farr. You speak Washingtonese, so we've heard from the leaders in the Senate. We know the House is reconvening. The president's back in town. Go ahead, invest right now, Michael.
God, doesn't it just make you sick? I mean, the one thing I want everybody to watch, next time Eamon Javers is on with that backdrop behind him, even the American flags were blowing in opposite directions. I'm not sure how the wind was swirling around the Capitol, but I thought it was a perfect graphic. Fabulous. You can't make that up.
Right.
You know, okay, so what do you do when you don't know what's going to happen? And we really don't. If you could get this debt limit thing right and guess how it's going to turn out, or guess that these guys are actually going to do something, all evidence to the contrary, how would you invest? And I think when you really recognize that none of us really know and probably got it wrong the last time the debt ceiling came around, you have to be conservative. You still have to go with companies with great balance sheets, lots of cash, some dividends. I mean, I came up with my top 10 list for 2013. It's on my website. But some names like Procter & Gamble, Schlumberger, even Chipotle, Medtronic, Cognizant. These are some names that I think with big balance sheets will last you through for the long term. Don't try to be a hero in this kind of environment.
You know, Rick Santelli, when we spoke to you earlier on the show, did I get the impression that you're starting to feel a little bit more hopeful than normal about getting a deal done? Do you feel differently now after listening to the senators?
Well, I can't tell you if it's going to be big or small, but I can tell you this. I think that with all parties going to be at the right place to actually do something, and some of these tweets, you know, whether you believe Scott Brown or not, I personally think that somebody forgot to tell him not to say anything, but that's just my opinion. All other facts seem to refute it. Yes, I think something's going to get done, but is it going to be big enough? Is it going to make a difference? You know, it's a lot more than just whether the stock market goes up and down for an hour, a day, or a week. We have some real issues, and I think that for most of 2013, it's going to be a much bigger type cliff discussion. It's just not going to have a specific expiration date.
And it needs to be, Rick. It needs to be. We've got to stop this spending. We've got to get this thing back in balance.
Absolutely. Listen, Mr. Farr, all I know is when I was doing some research about debt ceiling and how, you know, the power that the party in power always has a certain view, and it's always different when they're not in power, that in 2006, it was a big discussion about raising the debt ceiling under W from 8.2 to 9 trillion. To think right now that 16.4 is in the rearview mirror with 22 trillion, most likely the next stop. This is heart attack type information.
It is shameful and unforgivable, Rick. I couldn't agree with you more.
Keith Springer, sorry.
I was just going to say, Keith Springer, do you invest on headlines or do you look longer term? And how in the world can you look longer term with all the noise going on right now?
You hit it right on the head, Bill. Right now, we're only setting ourselves up for pain for two reasons. One is the market's been incredibly resilient, going up even with bad news. And we got to remember, if there was any good news, we'd hear about it. They wouldn't keep good news a secret. So I think people are buying ahead, buying the rumor. They'll be selling the news if we have a deal. And I think if we don't have a deal, we fall off. And I think the market falls even further. The average investor has to be very careful here. Always invest for need, not for greed. Don't simply roll the dice in the market and hope to make all the money with all the loss. They got to invest for what they're looking for, income, dividends. Be very, very cautious going forward here.
Very, very, very quickly, Keith, if we do, in that scenario you just painted, we fall off the cliff, we have a big fall in the markets, would you be a buyer?
Not right away, no, because we would continue to fall through the beginning of the year. Now, we have to remember that they can vote retroactively, and they most likely would. But I think it would cause such a panic that the market would fall quite a bit, hundreds, maybe 1,000 points very quickly, not just for the less of investment, but also as a slap on the face to politicians, because the market has a tendency to do that. The market likes to send a message to politicians when they're asleep, and we've got to wake these guys up.
All right, guys, thank you very much. Can't decide who won the tie derby on this one either. Everybody's wearing cool-looking ties today.
Yeah, wake
Happy
up,
New Year.
Washington. You said it.
See you later.